The Construction Market Guide is designed to provide contractors and construction executives with timely data on the economic environment, materials prices, and the labor market so you can make informed decisions that increase profitability. At the outset of this Construction Market Guide, I'd just like to congratulate the Associated Builders and Contractors members who were Excellence in Construction Award winners. We saw some incredible quality projects, some exceptional work, and we were happy to see that honored at the recent Excellence in Construction Awards Gala. Our firm was also deeply honored to be named Associate Member of the Year. We've been involved with ABC for a long time and really appreciated that honor. Many people have asked to learn more about the work that we do, so I'll just take a minute and talk about one of the things perhaps that we're most well known for is our 401k planning and analysis. And this is a slide from a current construction client that came to us as a client that was with another firm, and they asked us if we could take a look at their 401k. And when we did a fee benchmark and an analysis of the fees that they're currently paying with their provider relative to some other alternative providers. And we were able to save them about over $20,000 a year in fees by making some changes. And in the same way that your cell phone probably looks a lot different today than it might have 5 or 10 years ago, there have been a lot of changes in the 401k industry, and it makes a lot of sense to review plan expenses and features and the design of a plan to make sure you're optimizing the tax benefits and that its investments are performing well and that you're getting the maximum value that you can from your plan. Another thing that we often do for people is we've had a number of clients come to us and say, boy, at the firm that we had our money before, our money just wasn't growing. Can you take a look at this and see what's going on? And this is a slide that shows an analysis that we did for another client where, sure enough, their investments really weren't growing over time nearly as much as the overall market or as other investments might have, because their investment expenses and fees were so high. In this case, the client had an annuity with some riders and guarantees that they weren't using and really didn't want to be paying for. And by making some adjustments and stripping out some investment expenses, we were able to save them a significant amount of money. We also do a lot of tax planning in cooperation with clients' CPAs, as well as estate planning in cooperation with clients' attorneys. We love working with people's other advisors and helping them provide a secure plan for themselves. We also do a lot of personal financial planning, in particular retirement planning, and help people get on a solid track to accomplish their goals. You can take a look at more information here on our website. And now let's jump into the Construction Market Guide. We see initial unemployment claims continue to fall, and the unemployment rate in construction is now back below pre-pandemic levels at 4%, at a 4% unemployment rate in construction. Construction sentiment numbers still look strong, although we see some concerns or cause for potential concern in the Architectural Billing Index, particularly in the Northeast. You'll note that a number below 50 here represents contraction in the architectural billings, and in the northeast part of the U.S., that number dipped down to 48.6. So showing some signs of concern in project planning and construction. The materials cost index continues to be all over the board. Lumber prices have dropped back significantly. But oil prices and iron and steel continues to chug away at incredibly high rates, up 50% on iron and steel prices over the last 12 months. New housing starts continue to moderate, and a big information here on the interest rates. We continue to see rising interest rates, in particular on the short end of the curve, meaning if you're looking at lending money to the U.S. government for 1 month, 6 months, 1 year, 2 years versus longer 10 or more year bonds or interest investments, you'll see that the interest rates, particularly on those shorter term loans, continue to rise. That's starting to create some cause for concern. We've seen a bit of a pullback in markets here more recently, as higher interest rates could cause a bit of a slowdown in the economy. We're also seeing higher inflation, as we've talked about in the past. If we see a period where short-term interest rates are higher than long-term interest rates, that's called an inverted yield curve, and it tends to be a signal for potential recession. So we're not there yet, but there's a bit of movement in that direction, which is causing some concern over the mid and long term. Stocks continue generally, as I said, moderated a bit recently, pulled back a bit, but are very close to their all-time highs and have performed well more recently. If there are things we can do to chat about your personal business or finances, please reach out to us. Thanks for listening, and we're happy to help. Have a great holiday. Take care.